Hey there, fellow adventurers in the world of investment. You know, we all share the common dream of financial independence, the kind where you're calling the shots and money worries take a back seat. Now, here's a little secret. Have you ever thought about dividends as a magic ticket to this dream? Hold on to your hats because we're about to dive into the fascinating world of dividend investing with a special spotlight on the Schwab US Dividend Equity ETF. This ETF isn't just another investment option, it's a game changer that might just redefine how you look at your financial future. So, let's talk about Schd, the investment world's equivalent of a trustworthy friend who always has your back. First things first, this ETF has got some serious street cred. It's been giving the market a run for its money with consistent returns that leave most other investments in the dust. And guess what? There's a method to this madness. Schd is like that friend who knows exactly where to invest your money, picking stocks with a history of spitting out dividends like clockwork. But here's where things get exciting. Schd isn't just about dividends as they are. It's all about the dividend snowball effect. Picture this. Dividends rolling in, getting reinvested, and suddenly, your investment snowball is growing at a speed that leaves your typical snowball fight in the dust. Alright, buckle up. We're about to crack the code on that age-old question. How much moolah do you need to invest in Schd to live that dividend-powered life? Hold on to your calculators because the answer might just knock your socks off. You see, the usual approach involves throwing a big chunk of change up front. But let's be real. Who has $1 million lying around? Well, turns out you don't need that much. It's all about consistency, regular contributions, the beauty of dividend growth, and the awesome power of reinvesting. It's like the tortoise in the fable, slow and steady winning the race. With a sprinkle of time, that portfolio of yours starts flexing some dividend muscles you didn't even know it had. Schd, the Schwab US Dividend Equity ETF, stands out as a shining example of a well-constructed investment vehicle that caters to those seeking consistent income streams through dividends. Its popularity among investors is founded on its remarkable performance history, which showcases consistent market-beating returns over the past decade. This consistent outperformance is a testament to the ETF's underlying investment strategy, which focuses on high-quality dividend-paying stocks. In an investment landscape often characterized by uncertainty, Sched's ability to weather market downturns and deliver stable dividend income is a significant attraction. Investors are drawn to its reliability, which can help provide a sense of financial security, particularly during times of economic volatility. This dependability is underpinned by the fund's underlying index, the Dow Jones US Dividend 100 Index, which carefully selects stocks based on fundamental strength and dividend sustainability. The ETF's core strategy revolves around capturing the essence of the dividend snowball effect. This phenomenon, driven by the combination of dividend growth and reinvestment, enables investors to benefit from compounding over time. The concept is simple yet powerful. As dividend payouts increase and these dividends are reinvested, the overall portfolio value grows at an accelerating rate. Sched's ability to capitalize on this effect underscores its position as a strong contender for investors seeking sustained income growth and wealth accumulation. The investment model presented offers a fresh perspective on the concept of living off dividends. It dismantles the conventional approach of estimating a staggering initial investment amount, showcasing that achieving dividend-based financial independence is accessible through consistent contributions, prudent dividend growth, and strategic reinvestment. By factoring in the dynamic interplay of these elements, investors can realize their financial goals with far less capital than initially perceived. What's particularly intriguing is the model's emphasis on realistic investor behavior. It acknowledges that most individuals don't possess a lump sum to invest upfront, and it accommodates the common practice of regular monthly contributions. This adds a layer of practicality to the discussion, making it relevant and applicable to a broader range of investors. The prevailing wisdom in financial circles often revolves around the notion that substantial capital is required to achieve financial independence. However, the Schd model challenges this narrative by demonstrating that intelligent dividend investing coupled with disciplined contributions and reinvestment strategies can yield remarkable results. This reevaluation is empowering for individuals who aspire to live off dividends but may have been previously discouraged by what seemed like insurmountable initial investment requirements. In a landscape where the traditional rules of finance are being redefined by innovative investment strategies and technologies, the SCHD model echoes the call for a more inclusive and achievable approach to financial freedom. It opens a new avenue for those who seek reliable income streams, enabling them to potentially reach their goals sooner than they might have anticipated. A key aspect of SCHD's appeal lies in its potential to provide diversification benefits. The ETF's underlying index, the Dow Jones US Dividend 100 Index, is designed to select dividend-paying stocks with fundamental strength. This approach inherently introduces a level of diversification, as the index includes companies from various sectors. Diversification can help mitigate risk by reducing the impact of poor performance in any single stock or sector, thereby enhancing the stability of dividend income. SCHD's strong historical performance raises important questions about its ability to sustain such success in varying market conditions. Analyzing how SCHD has performed during different market cycles, such as bull and bear markets, offers insights into its resilience and adaptability. This can provide potential investors with a better understanding of how the ETF may perform during different economic scenarios. Another factor to consider is the tax efficiency of SCHD. Dividend income is subject to taxes, and the tax treatment can impact the overall return on investment. Understanding the tax implications of SCHD's dividend payouts and how they align with an investor's financial goals is crucial. Additionally, exploring strategies to enhance yield, such as tax-efficient portfolio management, can optimize the income generated from the investment. Dividend aristocrats are companies with a history of consistently increasing their dividends for a certain number of consecutive years. Investing in such companies can provide a strong foundation for a dividend-focused portfolio. Investors may also aspire to achieve dividend aristocracy by selecting dividend growth companies that consistently raise dividends over time. This approach aligns well with SCHD's emphasis on dividend growth and can contribute to sustained income growth. Achieving financial independence through dividends requires a long-term commitment and disciplined investing behavior. Understanding the psychological aspects of long-term investing, including the challenges of staying the course during market fluctuations, is crucial. Addressing potential behavior biases and maintaining a focus on the end goal can help investors remain committed to their dividend-based strategy. Regular portfolio rebalancing is essential to ensure that the asset allocation remains aligned with an investor's risk tolerance and goals. Monitoring the performance of SCHD within the overall investment portfolio and making necessary adjustments can optimize the portfolio's performance over time. Interest rate changes can impact dividend-focused investments. Exploring the potential effects of rising or falling interest rates on SCHD's performance, as well as understanding the Federal Reserve's monetary policy, can provide insights into potential shifts in dividend income and portfolio value. Environmental, social, and governance (ESG) factors are becoming increasingly important to investors. Understanding how SCHD's underlying index selects and evaluates companies based on ESG criteria can align the investment strategy with personal values and long-term sustainability goals. Keeping an eye on market trends and technological innovations that may impact dividend-paying companies can inform investment decisions. Trends such as the rise of renewable energy, advancements in technology, and shifts in consumer behavior can influence the performance of dividend-focused investments. Beyond financial gains, dividend investing can provide psychological rewards. The consistent flow of dividend income can offer a sense of financial security and contribute to peace of mind. Exploring the emotional benefits of achieving financial independence through dividends adds depth to the overall investment journey. So there you have it, folks. SCHD isn't just an ETF. It's an invitation to rethink financial independence. It's a reminder that dividends aren't just numbers on a paper. They're the building blocks of your financial future. As you wade through the numbers, the charts, and the stories of investors who've done it right, remember that financial independence isn't about having a yacht in every port. It's about having the freedom to call the shots in your life. SCHD might just be your partner in making that happen, one dividend at a time. So, cheers to dividends, to SCHD, and to your journey toward financial freedom that's as exciting as it is achievable.